It's Wednesday, the 18th of August 2021. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Sean Aylmer. BHP will divest its oil and gas business, buy into potash and drop its London listing in the biggest change for the company in 2 decades. That's our main story. Also coming up in today's podcast, the local share market tumbles on disappointing earnings results while the Aussie dollar falls below 73 US cents. The Reserve Bank leaves open the possibility of providing more support for the economy, and another dreadful day on the COVID front. Then stay listening for my chat to Commonwealth Bank economist Gareth Aird about the ever-changing economic outlook. But first, here's a brief look at markets. Wall Street fell overnight after Fed Chair Jerome Powell said COVID will likely remain for a while, and retail sales in the world's biggest economy disappointed. In early afternoon trading, the S&P 500 is off 1%, the Dow Jones Industrial Average is 1.1% lower, and the Nasdaq is down 1.2%. European markets were higher, with London's FTSE up 0.4% and the Stoxx Europe 600 0.1% higher. The S&P ASX 200 closed almost 1% lower yesterday to 7,511 points. That was the worst session in almost 2 months. Commonwealth Bank dropped another 3.5% and is now back to $99 a share. The other big 3 banks were around 1% lower. Broadly, the mood in the market was glum, reflecting some disappointing earnings results and bad news on the COVID front. Oil prices were lower for the 4th consecutive session overnight. The price of gold was pretty much unchanged, and the Aussie dollar has fallen sharply on the back of comments by the Reserve Bank board yesterday. More of that in a moment, but the suggestion that the bank might provide more support if the economy needs it triggered a fall to 72.5 US cents overnight. That's its lowest point since November last year. BHP will spend nearly $8 billion investing in potash mining, merge its petroleum business with Woodside, and end its dual listing across London and Australia, thus redefining the big Australian for decades to come. On the back of a massive underlying profit of $17.1 billion US, almost twice the level of a year ago, Chief Executive Mike Henry outlined the biggest change to the company since BHP merged with Billiton back in June 2001. For the full year, BHP will pay out a record $15.2 billion US in dividends. The financials were underpinned by very strong performances in its iron ore and copper divisions, but the huge result was overwhelmed by the strategic announcements. BHP has wanted to invest in potassium fertiliser, or potash, for many years and will go ahead with its Jansen project in Canada. Potash is used to lift yields in agriculture, and the massive spend is a bet on the world needing more food to feed itself. It's a shift away from hard commodities like iron ore, copper, and nickel and coal, and gives BHP a new strategic pillar. The merger of the oil and gas business was more surprising, notwithstanding media leaks in recent days. Undoubtedly, oil and gas has a future as the basis for much of the world's energy needs, but the greenification of energy is inevitable, and BHP is reducing its exposure to fossil fuels while they're still viable. BHP is also looking at options to divest its coal assets. The new business will be worth around $40 billion and have operations in Australia, Senegal, and the Gulf of Mexico. It will be a top 15 company on the ASX. BHP has traded on both the Australian and London exchanges since its merger with Billiton. The London-denominated shares always trade at a discount to the local stock because they didn't get access to franking credits. That structure is now being unwound, and having a single primary listing on the ASX will definitely simplify the business. It's also a reflection of the internationalisation of capital flows. It's much easier today for an international fund manager to invest in the ASX as opposed to 20 years ago. BHP's share price in London last night was up 3.4%. BHP is arguably the world's best miner at its peak. It's used its massive cash flow from record iron ore prices to reward shareholders and reconfigure its business. It's made a massive play on a greener future and a world that needs feeding. It's a gutsy move from CEO Mike Henry. In a moment, the rest of the news you need to know this morning. In overseas news, the situation in Afghanistan remains critical, with Australian Defence Forces ready to be deployed to help hundreds of citizens and Afghan helpers out of Kabul. Last night, the Taliban urged public officials to return to work and pledged to grant amnesty to government workers. It also said it would respect the rights of women within the framework of Islam. Evacuation flights from Kabul resumed, with only members of the international community allowed into the airport. Singapore is considering pilot programs to allow fully vaccinated tourists from Australia, the US and the UK to visit, as long as they stick to carefully controlled itineraries. Singapore's Trade Minister said a more extensive reopening would depend on countries around the world controlling COVID. And New Zealand yesterday announced a 3-day nationwide lockdown after just one case of coronavirus was discovered. It's the first evidence of the virus in the country since February. Locally, the Reserve Bank of Australia has left open the way to boost its weekly $4 billion bond purchasing program in light of the worsening COVID outbreak down the east coast of the country. In its board minutes released yesterday, the central bank says the program will continue to be reviewed in light of economic conditions and the health situation. The minutes say the board would be prepared to act in response to further bad news on the health front should that lead to a more significant setback for the economic recovery. Since that meeting 2 weeks ago, the case numbers in New South Wales have accelerated, the ACT has gone into lockdown, and Victoria's shutdown has been extended. Meanwhile, the weekly ANZ Roy Morgan Consumer Confidence Index rose back above 100 points this week, thanks to a surge in Queensland, which came out of lockdown. Sentiment also jumped in Sydney despite the rising COVID cases. And spending data from ANZ shows Sunday sales were among the weakest since April 2020. Westpac expects a strong rebound out of the current economic slowdown when restrictions are lifted, and so far there's been little damage to credit quality. The country's second largest bank and fifth largest company said some home and business loans had been deferred as a result of lockdowns. It expects the economy to expand at close to a 5% clip this year and house prices to rise by around 15%. Both figures are upgrades on previous forecasts. Westpac will likely return capital to shareholders later in the year, just as Commonwealth Bank and National Australia Bank have already done. Westpac's share price fell 1.3% yesterday. New South Wales recorded 452 new local cases of COVID yesterday and one more death. The state currently has more than 7,500 active cases and has recorded 57 fatalities from the latest wave. The Australian Defence Force was due in the west of the state yesterday afternoon to help vaccinate people in remote communities. The good news out of that state is the number of vaccinations given, with New South Wales likely to reach 6 million jabs by the end of the month. Across the country, 10 million Australians have had at least one jab. New South Wales Premier Gladys Berejiklian said September and October would be very difficult months as the state worked to achieve a 70% vaccination rate. The ACT recorded 17 new COVID cases yesterday, and there are now 45 active cases in the territory. Victoria recorded 24 new cases, taking the total number of active cases to 227. Transport and logistics giant Brambles is running out of pallets. It owns about 330 million of them, but demand for groceries and other consumer products in the stay-at-home economy, particularly in the United States, means retailers and wholesalers need and are stockpiling pallets. Add to that much higher timber prices, the price of a new timber pallet jumped 45% last year, and there's a lot of unpredictability about the business, Brambles Chief Executive Graham Chipchase said. He was speaking after unveiling a 17% jump in profit last financial year. Santos expects to sign a binding deal with Oil Search next month, which for a few hours before BHP's mega announcement last night was going to be the largest oil and gas company in the country. Chief Executive of Santos, Kevin Gallagher, said he was pleased with the progress of talks between the two companies, and a merger would create a unique, diversified portfolio of long-life, low-cost oil and gas assets. The main impediments to the deal remain the OK from the Papua New Guinea government, where many of Oil Search's assets are located, and shareholder approval. Mr Gallagher was speaking after unveiling a 50% jump in net profit last financial year, slightly better than expected. Santos' share price fell 0.8% yesterday. The competition watchdog has warned that the east coast of the country could face gas shortages next year if Queensland LNG producers export all of their gas. The three Queensland producers, Santos, Origin Energy and Shell, didn't adequately comply with the supply pact agreed with the Morrison government in January, the Australian Competition and Consumer Commission said. Chair Rod Sims said they'll need to lift their games. Sleep apnea group ResMed will launch a new device in the US, which it hopes will help hundreds of millions of people with sleeping disorders. The new product, an upgrade from its current version, goes on sale next month in the US and then will be rolled out globally. ResMed's share price jumped 2.3% yesterday. I've always loved Breville, the company. I lived on their toasted sandwiches throughout universities and, in fact, still do, really. Salami, cheese and chutney. You can't go wrong. Apparently, I have many friends. The kitchen appliance company yesterday reported a big jump in net profit as people in lockdown bought more coffee makers and mixers. Sales for the 12 months to the end of June passed $1 billion for the first time, helped by the push into France, Portugal, Mexico and Italy. Italy. Imagine trying to sell a coffee machine to an Italian. Breville cut its dividend in line with its strategy to spend more on growing the business, and it was somewhat equivocal on the next 6 months, which was enough to trigger a 9% drop in its share price yesterday. Along the same lines, ARB, the four-wheel drive accessories group, said profits nearly doubled on the back of bumper demand, pardon the pun. Exports are now around 1/3 of total turnover. Online property group Domain has benefited from the booming housing market, with net profit up 66% last financial year. The group returned to paying a final dividend. Its share price jumped 4.7%. Magellan's share price tumbled more than 10% yesterday after the fund manager revealed a more than 60% fall in performance fees for its flagship global fund. Its core funds management business still managed to expand, with management fees higher, though net profit was down by 1/3. And finally, one for everyone in lockdown. Hisense yesterday launched a 120-inch laser TV. A laser TV is somewhere between a projector and a TV and provides a more cinematic experience. Now, you can buy a very, very big one. Time to catch up on Peaky Blinders. Stick around because up next is our daily interview. Today I'm talking to Gareth Aird, Head of Australian Economics at Commonwealth Bank. With the COVID crisis getting worse and our two biggest cities in lockdown, the economic outlook isn't great. But Gareth raises a few points I'd never really considered before, and it makes our situation even more confronting. If you're in business, it's a must listen. That's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. It's Wednesday, the 18th of August, 2021. I'm Sean Aylmer, and that was Fear and Greed. Enjoy your day.